Hello. Today, let's understand two powerful tools that shape our economy: monetary policy and fiscal policy. Think of the economy like a big machine. Sometimes it runs really fast, sometimes really slow. To keep it balanced, leaders use these two levers. Monetary policy and fiscal policy affect everything from job opportunities to the price of groceries. Think of them as the weather forecast for our financial lives. Knowing how they work helps us plan. Both aim for a stable economy, stable prices, jobs for those who want them, and confidence for businesses. But they use different tools, and different people manage them. It's like two mechanics working on the same car. One handles the engine, the other the fuel. We'll learn who controls each policy, what tools they use, and how they steer our economic ship. By the end, you'll see how these levers keep our economy on track. Let's get started. First up, monetary policy, managed by the central bank, like the Federal Reserve in the US. Their job? To control the flow of money to keep prices stable and people employed. The main tool? Interest rates, the cost of borrowing money. If inflation is too high, the central bank raises rates, making loans more expensive and slowing down spending. If the economy is sluggish, they lower rates, making borrowing cheaper and encouraging spending. These moves ripple through the economy, affecting everything from mortgages to business loans. The central bank acts independently, focusing on data, not politics. Their goal? To keep inflation low and predictable, usually around 2% each year. By adjusting interest rates, they either hit the brakes or give gas to economic growth. It's a delicate balance, but crucial for a healthy economy. Every rate change impacts your pocket, whether you're saving, borrowing, or looking for a job. That's the power of monetary policy. Now, let's talk about fiscal policy. How the government collects and spends money. Congress and the president decide on taxes and government spending. Lowering taxes puts more money in people's pockets, boosting spending and growth. If the economy is overheating, raising taxes can slow things down. Government spending is the other big lever, funding schools, roads, and public projects. In tough times, the government can spend more to create jobs and stimulate the economy. When things are going well, they might cut spending to prevent inflation. Balancing taxes and spending is crucial. Spending too much leads to a deficit. Spending less leads to a surplus. Fiscal policy decisions shape public services, job opportunities, and your take-home pay. It's a direct way the government affects our daily lives. That's fiscal policy in action. Let's compare these two levers. Monetary policy is run by the central bank, fast, data-driven, and independent of politics. Fiscal policy is managed by elected officials, slower, often shaped by political debate. The tools are different. Monetary policy uses interest rates and money supply. Fiscal policy uses taxes and spending. Monetary policy is broad and indirect, affecting the whole economy at once. Fiscal policy can target specific groups or regions, but takes longer to implement. The central bank can change rates quickly. New tax laws or spending bills can take months or years to pass. Both aim for stability, but their approaches and timelines are very different. Understanding these differences helps you see how economic decisions are made. Together, they keep the economy balanced, sometimes working in sync, sometimes not. That's how these two levers compare. So, why should you care about monetary and fiscal policy? These decisions affect your job prospects, the cost of your loans, and the taxes you pay. Buying a house or a car? The interest rates set by the central bank determine your payments. The quality of schools, roads, and public services? That's fiscal policy at work. When the economy is in trouble, these policies can create jobs and protect your savings from inflation. When they work well, your money keeps its value and opportunities grow. Understanding these tools makes you a smarter citizen and consumer. Next time you hear about interest rates or tax changes, you'll know what's at stake. The economy isn't a mystery. It's managed by people using these powerful levers. Knowing how they work helps you navigate your financial future. Thanks for joining me on this economic journey.